Hi, this is Daniel with Unrivaled Investing, and today we're going to talk about Overstock. The ticker is OSTK. The purpose of this video is to dig in to understand what is Overstock, what do they do, and why have shareholders been on a wild ride so far in 2020 to understand what's going on. Usually when you see a dramatic change in share price, there's some sort of potential because people are misvaluing a company or they don't quite understand what its assets are or what its value is. So I'm hoping with this video to dig in and to say what price would I get interested in Overstock, or am I buying it? You know. So why did it get my interest? It's been an incredibly wild ride at a low of $2.50 and a high of $128 just in 2020. So at one point it was a 50 bagger from its low. That's incredible. That's an incredible amount of volatility, and it suggests a wide range of expectations. So we want to understand what's driving this volatility, what's the potential range of expectations, and is there a price here that we could sort of pencil out where we'd say, wow, this is interesting to dig into. So what's the goal of this video? One is, what is Overstock? What do they do? Second part is understanding each of the components of the company, because it's not just like one solo business to dig into. What's their value proposition? Is it unrivaled? And what's a fair valuation? But before digging in, if you enjoy, watching videos or learning about companies that could potentially go up hundreds or even thousands of percent, hit that subscribe button. If you're already a subscriber, hit that like button. And if you want to know what I'm personally buying and selling in any given month, go to unrivaledinvesting.com and click that journey button. Also, for those that do subscribe, you're effectively a patron of this channel that makes it possible for me to continue these Unrivaled Investing educational videos. Also, if you have any questions about stocks or any particular companies that you'd like me to look at, feel free to leave a comment below. Thank you. So what is Overstock? Really, it's three different companies at the very least. You'll see later on how it's actually could be viewed as even more. So you need to understand the three different components that's driving the value. The first is Overstock Retail. The next is tZero, and then the last is Medici Ventures. So if you were to look at, what is Overstock Retail, and it's primarily a website, overstock.com, where they are selling home furnishings. It's an online brand, primarily drop shipping, meaning they don't really take that much inventory. It's connecting these merchants and sellers that sell directly through their platform to these individuals. And you could see that they are not the top player in the space. You can see that Amazon is number one, Wayfair is number two. Wayfair is a public company, ticker's W. You have Walmart and Target, and then Overstock is number five. So just to do a quick pause, the reason why this is a really important data point is the name of this channel is Unrivaled Investing, and that's because I'm working from the premise that the best shareholder returns are generally driven by sustained growth over time. And how do you get sustained growth? You get sustained growth by offering an unrivaled value proposition. That means you have a good or a service that others just don't offer. That's either based on price or quality that others just can't compete. And if others can compete, that gives you sort of a right to win over time. And so when I see that Overstock is number five based on online revenue for the home furnishing market, I automatically disqualify them as like, okay, you're clearly rivaled. Not only are you rivaled, but you're competing against some really tough competitors. I personally do not want to compete with Jeff Bezos or with Wayfair. And so, automatically, if this were their only component or their only asset, I would probably have a hard pass and it would be over, move on to the next company. But there's more than meets the eye with Overstock, and that's why I wanted to do this video, and that's why I wanted to dig in, because usually when you have this sort of volatility from $3 a share or $2 a share to $128 a share, there's something else that's going on. But for a moment, let's stay with retail, because there's actually quite a bit going on there, where you could see that they've been steadily losing share over time. This is their revenue over time. And honestly, it stinks, to see slowly but surely declining. And earlier in 2019, you were looking at 10 to 15% drops. This only reinforces the idea of a very ribald value proposition, a hard pass. And how have they done in 2020? So in 2019 it was down 20%, and then for the first part of this year before really the pandemic switch, they were down 6%. So once again, very rivaled, hard pass. But then once the national emergency was declared, the amount of sales that went through their platform just went bananas, which is incredible to see. And I think this is a key point to understand when you're thinking about the stock price, is that when the pandemic hit in March, stocks started cratering. The expectation is we are facing a new depression, and we might still be facing that. But the reality is this is quite unlike previous dramatic recessions or contractions or depressions, in that a lot of folks were forced to stay at home. And when they're forced to stay at home, there was this huge uptick in purchases for home goods. And that's why you see this uptick in Overstock sales. You could see a similar growth, and it's a comparable growth rate with Wayfair in terms of their revenue growth. And so when I see this, I don't think that's sustainable. It's not like in 2 years from now, people are gonna be like, oh yeah, let's just keep buying lots of stuff for our home. It's sort of like one and done. Also, in a depression mentality, I don't think people are going to be like, oh yeah, let's go get those new chairs, every quarter. It's a one-time purchase. So I view this as a temporary bump, but when your expectations are for a contraction because you're facing a depression, and then you post 100% growth, of course the stock will be volatile. So that's part of, I would say that's probably the biggest driver behind this volatility. That would be my guess. How would I value the Overstock retail segment? Um, Given that it's not an unrivaled value proposition, I'd obviously give it a huge discount, and it would be a discounted range. And you could see, what their revenue has looked like the last few years. And it's been a pre-tax loss, which makes this like add insult to injury. Not only have they been losing share, but they've also been unprofitable. So a lot of this is sort of pie in the sky analysis of like what the revenue could be in the future. I'm not really giving them any benefit for 2020's bump. Thinking about like maybe what's a normalized figure in the future for thinking about what's the potential future valuation. This is a guesstimate. This is my back of the envelope guesstimate, saying 1.9 billion in sales, and you could see how that range. So that assumes they're doing better than what you saw in the last 3 years, and then I'm assuming a 7% profit margin. They think they could do mid-single digit EBITDA margin. So this is approximately what they're saying. And also one of my holdings, and you would see it if you're an Unrivaled Investing Journey subscriber, is that one of my holdings is actually a dropshipping business that is executing really well, that has grown 15 to 20% a year and does 6% plus operating margins. So I know that dropshipping businesses can be very lucrative, can be asset light, capital efficient, grow nicely. And, in this case, this company, historically paid out almost all their free cash flow, and it was yielding like a 5% dividend. So I know how profitable and how valuable a successful and well operating dropshipping business can be. At this point, Overstock isn't there, but maybe some point it is, like this potential future valuation. So I'm penciling out in the future maybe 100 million in net profit. Slapping on a tax rate margin, maybe. And given that there's a lot of sort of lofty expectations here, I'd want to cut it down to size with like what is sort of the discount rate, or what's the yield I'd want to get as an investor to get that, like to buy that. What's the payoff that I'd be willing to, at what price is it a good payoff for me? And I'm assuming a 7.5 times net income multiple, which the inverse of 7.5, so 1 divided by 7.5, is over a 13% free cash flow yield. So you can see that here. So I'm paying, I would say, effectively a 13% free cash flow yield. That starts getting me interested. And keep in mind, this is for hypothetical results that I just don't know they'll be even able to put up anywhere near these figures in 2 to 3 years from now, whether or not it's from a sales or margins perspective. So that's why I'm giving this wide, this low multiple sort of. You have to meet these hurdles, but if you're not meeting these hurdles, at least I'm throwing on a really low multiple. This is the reason why I don't spend a lot of time on companies with that are very rivaled, is because you start pulling your hair out. It's like, well, any company can be a great investment, just depends on the price. And I honestly don't want to spend all my day, and this is just my own personal choice, focusing on like, well, how cheap is cheap for a crappy asset? And Overstock really just doesn't impress me with what I've seen so far, at least their retail operations. And at $60 per share, which is approximately where the shares trade right now, this is in September 2020, that's around a $3 billion market valuation, a little under $3 billion market valuation for all of Overstock. And if I'm assuming 7.5 times 100 million in profit for their retail ops, I'm saying that the other assets that are outside of their retail is, around $2 billion for their other assets. And so then the question is, can you justify, that $2 billion valuation for their other assets? What are their other assets worth? And so the first is looking at tZero. tZero is a platform for launching and trading tokenized assets. And so here's the description that you can see from a recent presentation, where they aim to remove the efficiencies present in the current trading and clearing environment and to broaden access to capital and investment opportunities. Okay, and how do they make money? You can see here with the revenue model, where it's based on new issuances. So new issuances on a tZero trading platform, as well as the amount of trading activity that goes on, where they're probably getting some sort of very, very small cut that goes through them. And so far, what you've seen is I think one of the main, there's only like two or three securities that at this point trade on the tZero exchange. One of which is this Overstock preferred that is senior to the common, pays out a dividend, the similar dividend to the common. It's senior to it, so you get preference. It's convertible to the equity, and yet has historically traded at a discount. So for those that are interested in some sort of share class arbitrage and wanted to buy Overstock, that would probably be the way to do it, is buying it through tZero, because you're getting a material discount from the share price. But that's a whole other, like, do you want to have to put your money on the tZero, open up a dinosaur brokerage account, which is, I think, the name of the broker, to be able to buy things through tZero. It's honestly, I've gone through the process. It's not that painful, but it's sort of annoying, because you're just moving cash aside just to buy one asset, and it's not very convenient if you're trying to look at your portfolio in aggregate. Let's keep going. So what is tZero? What sort of assets could trade on there? And that's really the opportunity here, is that they're trying to say it'll be easier to get liquidity on tZero for some type of real estate and private companies. Why is that? And the reason is that some assets, it's a real pain to list it, whether or not it's a private company or real estate. Where you might have to have all sorts of disclosures, disclaimers, fill out all sorts of SEC paperwork. So could you sort of get around those inefficiencies by listing it on tZero and having these tokenized? So that means some sort of blockchain asset that's representing a portion of, or representing some equity in these assets. And they're saying that they have a pipeline of 200 plus issuers that are, interested in getting on their platform, i.e., there are all these assets out there that would like to be able to be traded to get some sort of liquidity. And they're saying the real estate and private companies are the near-term opportunity, majority of their current prospects, whereas they have these other things like blockchain related companies like healthcare payments, yield plays, and financial products. So there's there's a lot of terms thrown around here. There's a lot of industries. I'd like to see some traction before I would execute on any of this. And there's a real big question of like, why would buyers, you know, I can understand why sellers would want to sell because they otherwise wouldn't, if you're a non-traded real estate investment trust, now you're actually a traded real estate investment trust. So it's traded on tZero. So now you have some sort of liquidity. So that's an advantage. But why would the buyers really be incentivized to show up? And I don't really understand why it's 10x better for buyers. And I like to think, of opportunities as if you're trying to disrupt a field, and this is copying Peter Thiel's mindset, is that you should be, 10x better than whatever you're trying to disrupt. Because then why, if it's not 10x better, why would any existing customers switch to you? And I just don't see why it's 10x better. For example, one of the more recent securities is the Aspen Digital Security Token, where you can own part the uh, of the St. Regis Aspen Resort luxury real estate. And this token, I don't, I in 10 minutes I tried to see their financials. I wasn't involved in their prior, investing, so I don't. Honestly, this was a little bit of a pain for me versus the consistency and ease of being able to go to the SEC's website to figure this stuff out. So I just don't get the appeal. I don't know why buyers would show up unless there were just incredible bargains. And the reason why ultimately the SEC got set up in the first place was to prevent people getting their faces ripped off by crappy listings. The blue sky rules is like there's actually a company here, there's actually an asset. So I don't understand, in all honesty, why you wouldn't just start listing really crappy assets on tZero, which only further worsens the problem of like, why would the buyers want to show up? Like, what's the incentive? Like all those private companies, why can't they list on the public exchanges? Is it really just that burden of getting listed, especially in the environment of SPACs, where I'd argue it's never been easier to get a backdoor into a public listing. So I just don't, honestly, I don't see the dramatic appeal, the 10x appeal for buyers. And it's tough to know or guess what tZero will be worth. Once again, I'm going to do a back of the envelope for it. And the reality is it really depends on the traction they're able to get with new issuers and the buying, the trading activity. So like if they're able to get, let's say in the next couple of years, 10 plus new issuers, there are these private companies, there are these sexy companies, or these real estate, individual assets or portfolios where it's easy to see their financials. People are eager to look at it. Maybe they're paying a dividend or you're getting some sort of yield. Then you could see this like dramatic growth, because then buyers would be like, man, no interest rate environment, maybe I can get a dividend from this, or like I can own this sexy asset that I couldn't own elsewhere. But unless you start seeing the traction, I don't know why tZero would scale. But once again, here's the potential value. And this requires a lot of assumptions. For example, based on the second quarter 2020 results, their annualized revenue was around 50 million. I'm assuming like maybe they 10x over, I don't know how many years, 5-10 years. And assume, they get 10 plus listings, so that they talked about a pipeline of 200 plus listings. And so if they're currently at 3 and maybe they can list 10 or 20 or 30, then maybe you can 10x in size, because the more listings you have, you get these issuer fees, plus you get more trading volume. And it's not necessarily a linear path. Maybe it's exponential the more securities that start trading on there. And then if you look at like the New York Stock Exchange, which is publicly traded, ticker NYX, you can see that their margins, net margins, are around somewhere between 20 and 30%. So if you assume like 25% net margin, so that's even after tax on 500 million in potential revenue. As you can tell, I'm doing a lot of like mental gymnastics to try to think about what tZero's value could be. This is honestly more of a venture approach where you're thinking about like what's the potential of this versus like what's the stake that's in front of me, what's the potential sizzle versus what's the stake. And that would imply at some point in the future tZero could be doing 100 million plus, 125 million in this case, but 100 million plus in profit, and then slap on some sort of nice lofty multiple, 25 times earnings. Then you're talking about $3 billion valuation for tZero. This is obviously, like a lot of assumptions. Who knows whether or not they get there. I would, before I would invest, I would need to see real traction here, that continued growth. And so far from a sales perspective, tZero revenue has grown. But the difference between 50 million and 500 million is a pretty sharp, pretty dramatic difference. So how about the Medici Ventures? So Medici Ventures is an accelerator of blockchain applications. They say that their mission is to democratize capital, to allow everyone to participate in local, national, and global markets, i.e. make it easier to trade no matter where you are. That's part of the appeal of blockchain. And then also eliminate the middleman, so that way you don't have any industry that requires a lot of intermediaries could be disrupted significantly with blockchain technology, because the costs are just so much lower to verify, and the settlement is much quicker than necessarily having to have an intermediary where you might have, you're buying and selling and they're saying this matches our books and therefore we're going to take a cut because all this work that we're doing. So that's their mission. Blockchain could rip out middlemen and democratize access to capital. Sounds like nice lofty goals. Great. What do they own? What is actually the Medici Ventures portfolio? And you can see it's a range of verticals from identity, land titling, banking and currency, capital markets, supply chain, voting. That's pretty interesting. Like, this isn't just like one thing like, hey, how do we get more speculative traders trading Bitcoin? This is how do we have real applications using blockchain that will impact real life examples. So let's go through some more detail, and you can see, this isn't like they own 100% of these assets. They own equity stakes. So this really is like you're owning part of almost like a venture firm that owns all these equity stakes, not even control stakes, but equity stakes. In some cases less than 5%, in some cases ranging from like 10 to 35%, where they're effectively helping these companies. First by investing in them, but also probably rolling out best practices because they're involved with all these other companies. So if you wanted to make a bet on blockchain applications, Medici Ventures probably is a interesting way to do it. The question is, are any of these assets, are any of these companies, and if you're looking at this, you can see there's all these like there are all these weird little companies here. Like, I don't know which one of these are going to hit and be successful. Like, maybe none of them, but maybe some of them. Are any of these companies getting traction? And on the Overstock Investor Day, I gotta give Overstock management a lot of credit. They're shining some valuable light on their portfolio. Not as much detail as I'd love, but I think for an early stage portfolio, the details they shared were helpful, and you can see it on their website. But here's an example of a couple of the companies they called out. Were Grain Chain. This company was only launched in the first quarter of 2019. And the Grain Chain has built a blockchain-powered platform for the global agriculture ecosystem that is transforming how farmers, buyers, and grain elevators do business. It ensures prompt payment to farmers and suppliers, facilitates immediate availability of tradable commodities to buyers, mitigates fraud and corruption, and increases efficiency along entire agriculture supply chain. So once again, removing the middleman and helping to ensure prompt payment for the buyers and sellers. And what's interesting is that even though this was only launched in the first quarter of 2019, they've processed over 13.1 billion pounds of commodities worth over $1 billion. I mean, this is not not necessarily like a pie in the sky company. This is showing real traction. That strikes me as interesting, and the fact that Medici owns, and you as a shareholder in Overstock, own nearly 1/5 of this company, strikes me as interesting. Like, imagine what sort of traction they could have in a few years from now. Going from nothing to 13 billion pounds. That strikes me as real start. They have this company called Voatz, which is a mobile elections platform that leverages both built-in security of the latest versions of smartphone technology and the immutability of the blockchain to enable safe and secure voting from a mobile device. I mean, in a world where the question of like, will the elections be secure? This seems like this is even more critical than ever. And here it is, they're talking about how they've conducted more than 60 safe and secure elections since their inception. I mean, this is super interesting what they're doing. And you can tell that it ranges from critical applications like this company Voatz to luxury offerings. Like, here's this company called Vinsent, which is a wine futures platform where they're trying to connect buyers of wine to the individual wineries, and like you could trade wine futures, and to validate the authenticity of the wine delivered through their supply chain. Over 100 wineries have been onboarded, 100 cases allocated to each. I mean, this is really interesting. Like, there's potentially a lot of disruption with some of these companies. I would be super curious to watch. I haven't seen enough data to say like, oh yeah, with confidence this is going to work. But if I wanted to make a speculative bet, like, yeah, at some price this might be interesting. But what's the value of the Medici portfolio? And like, I'm like, it's honest. Like, I don't have enough data to figure it out. Like, there just aren't the data points available. It's really just venture. Like, hey, they're addressing this huge market that could be worth millions of dollars. I don't know. Like, and they're then you have to factor in that Medici only owns, let's say 20% of the X company, and you don't know what their competitors look like. And so I honestly have no idea how to think about the Medici portfolio value. It could be a lot someday. Like, the approach to venture investing is like, if you have, seven complete duds, one or two home runs and just one that's just astronomical, then you do great. And there's potential there for the same thing here, where maybe one of these assets is just astronomical and just completely disrupts, like maybe it disrupts the grain industry, like grain chain. I don't know. Um, but from a shareholder perspective, at this point, my view is you have to track the progress to see if anything interesting comes out of this. Like, I would want to track, over time. Are you seeing continued traction? Are there data points that management is leaking to you? When I say leaking, I mean like putting out in their press releases or their quarterly updates, saying like, hey, we're excited to see Grain Chain has now processed $3 billion, $5 billion. X. If you start seeing real exponential growth, then you start saying, oh, that's interesting. I wonder what their take rate is of that. So how do you invest in Overstock? From here, we talked sort of about the unknowable with the Medici portfolio. We talked about a wide range of hypothetical assumptions with tZero. We did sort of a back of the envelope discounted valuation for the retail. How do you think about it from here? And honestly, for me, this probably goes in the too hard pile. There's a lot of work here, a lot of moving pieces. I don't like owning companies that are extremely rivaled. So you have this rivaled company, which is Overstock Retail, where they're selling the home furnishing goods, where they're not even a top tier player or a top two, second tier player. And you have these venture bets on blockchain technology that may be extremely disruptive and could be just real home runs. I don't know. So that's why, for me, it probably goes in the too hard pile. But for other people, I could understand why they would invest. If I wanted to pull the trigger on Overstock, I would want to see continued traction that their retail ops are growing and are heading to break even and profitability. And honestly, right now, it's just too hard to suss out like how much is a COVID bump versus normal operations. And so that's just time seeing the updates. And I'd want to see if like maybe, as an investor, maybe you can get it where you're getting the blockchain assets for free. And, I was penciling out, if you're looking at like $30 per share, based on the cash they have on the balance sheet, that might suggest around $30 per share, might suggest that you're getting, Overstock retail with the Medici and tZero assets for free. And that could be interesting. For me, it's still the too hard pile, but I'd love to see updates. It's one of these things where it's not going to be on the top of my list to track, but if I occasionally see something where it's like, wow, tZero is really taking off, like now there's 20 companies, or now there's 50 companies that are, or tokens that are trading on their platform, and they're doing real business, like, and these companies are interesting, and it's easy to see their financials. Then I'd start getting interested. But right now it's a little too early for me personally. I could understand why others looking to make a bet on blockchain would be really interested. If you are interested in seeing what I'm actually buying and selling and holding in any given month, go to unrivaledinvesting.com, click on that journey button. And if you become a subscriber, you're effectively becoming a patron to this channel, where you enable the production of these educational videos. So for all my existing subscribers, thank you so much. And thank you so much for watching. If you enjoyed this video, hit that subscribe button. If you're already a subscriber, hit that like button. Thank you.